Price reductions ticked up this week for the first time since November in the face of rising mortgage rates. Inventory is rising across the country too as home buying affordability takes another hit. The pace of sales inched down this week also. So we can see exactly the impact of higher mortgage rates slowing home buyer demand. As demand slows, inventory grows. Last year at this time, we were actually seeing surprising homebuyer demand with rates having fallen into the low sixes. Now mortgage rates are roughly 100 basis points higher. And as a result, the inventory is higher and the future sales price indicators are also softer than they were a year ago. We still see more sellers than last year. So each week there are more new listings than a year ago, allowing inventory to build and eventually leading to more home sales this year than last. But that sales growth rate is fragile too. If mortgages stay in the sevens or keep climbing from here, you can see exactly what's going to happen to home prices. A week ago, I mentioned that some of the home price signals were softening. Home prices aren't falling, but the growth signals are definitely softening, and that trend continues this week. The housing market has been changing very rapidly this year. The economy has continued to be strong, so mortgage rates have defied expectations and climbed higher. That's why at Altos Research we track every home for sale in the country every week. You can't just rely on the expectations of what's going to happen. We track all the pricing, all the supply and demand, all the sales, all the changes in that data, and we make it available to you immediately as it happens. I'm Mike Simonsen. I'm the founder of Altos Research, and let's take a look at the details of the U.S. real estate market for the end of February 2024. So there are now 498,000 single-family homes available, unsold on the market around the U.S. That's 70 basis points more than last week and 16% more than last year at this time. So this is the first inventory increase of the year. The market will continue to build unsold inventory from here for the rest of the season. There's nothing in the data that shows inventory declining from here this spring. So you could get a little bounce up or down, but the trend is quite clear. Mortgage rates are, like I said, roughly 100 basis points higher than last year at this time, and inventory is 16% more. Rates are 400 basis points higher than 2 years ago, and inventory is 53% higher. Higher rates creates more inventory. Many mortgage rate forecasters are still expecting a rate reversal, but until that actually comes to fruition, we will watch higher mortgage rates drive up the available selection of unsold homes on the market. In this inventory chart, you can see this phenomenon. We've shaded the red periods for rising mortgage rates and the green for the periods when rates fell. We are now 2 years from the low of mortgage rates and from the low of inventory. They both turn the corner at the same time. If we have another year or two with rates in the sevens or higher, we should finally get back to those old normal levels of inventory. And you can see how inventory is still a third fewer than it was available in 2019, but it keeps climbing, inching its way closer every week that rates stay elevated. We've been sharing how the sales rate has been trying to expand for 2024. Unfortunately, rising mortgage rates have not been cooperating. So last week showed good sales growth over 2023, and I mentioned that it might be fleeting. And sure enough, the number of new contracts started this week dipped just a little bit, with 59,000 new single-family home sales started this week. That's 2% fewer than last week, and it's just a fraction fewer than the same week in 2023. Any week where we have negative sales growth from last year is a disappointment at this point. But this is where you see affordability and demand take a hit from higher mortgage rates. In this chart, we're showing all the homes that get offers and go into contract, the contract pending stage in a given week. These new contracts pending are shown here in curves for each of the last couple of years. The dark line at the left end of the chart is that's this year trying to expand over 2023. And 2023 is really restricted rate of sales. But of course, affordability has not been cooperating in the last 6 weeks or so. So I still suspect that by mid-March, we'll see consistent sales growth over last year. The dark red line will be generally above the red line of last year's rate. At the time, a year ago, the market was facing dramatically restricted inventory. Now, buyers have more selection, so that cap on total transaction volume is lifted. So of course, economic data, like unemployment, for example, keep coming in very strong. And so if mortgage rates rise from here, then home sales will drop quickly. And so you'll see this, the dark red line here, you start to just not separate from the brighter red line curve from last year. I think by mid-March, we'll see it grow though. It is important to note that we can have rising inventory and rising sales at the same time, which is actually what I expect. I just wish the sales rate were climbing more quickly, more reliably each week. Would be nice to see. Perhaps the most notable signal this week is price cuts. The percentage of homes that have reduced their asking price from the original list price, that ticked up this week. So there are now 30.4% of the homes on the market that have taken a price cut. That's up from 30.0% last week. Every year has a cycle in price reductions. After the holidays, a fresh new inventory gets listed, so the percentage that have taken a price cut declines. Then in the spring, some of that inventory is still sitting on the market, so those sellers start cutting their asking prices. Then later in the year, price cuts accelerate as the summer comes to a close, at a peak just before the holidays to start the cycle again. In the years, the pre-pandemic years, this end of February time is actually a normal time to start seeing an uptick in price cuts. Some of the boom years, though, with all those crazy bidding wars, it took till much later in the spring for the price cuts to actually inch back into the trend. So in this chart, each line is a year, and you can see the cycle very clearly. This year is notable in that price cuts ticked up this week, which is the first time since before the pandemic to start to look like that old normal market behavior. So we're in the normal range, though, of price reductions. That normal zones, that's the gray band across the chart here. This meaning that sellers are generally fine. They're generally getting their prices. There's no signal of prices falling in this data. The uptick just shows us slowing momentum. In a couple of weeks, though, we could be behind the pace of last year, meaning more sellers with price cuts than a year ago. Last year at this time, we were seeing surprising homebuyer demand with rates in the low sixes. And so now rates are higher, and we see the opposite trend happening. If we see this year's line curve towards the top of the gray band, like quickly, that would be an indicator, the next indicator of home price weakness. So we'll see it tick up above last year, but probably not to the top of that gray band. We're not there yet. It isn't a catastrophic call for home prices. It is simply very clear evidence of how home buyers wait when mortgage rates stay higher for longer. The price of the homes that went into contract this week dipped a little bit too, which was interesting to note. The median price of the newly pending single-family home sales was $375,000 this week. That's down from $378,000 last week, almost a 1% dip. It's still 2% higher than a year ago. It is normal to have a little bit of noise in the pending prices. You can see a little up and down across the year, but it's not a straight line. But it is maybe unusual in this key part of the buying season to see a downtick week. It's something to keep an eye on. It's one little tick. This chart of home prices going in, this is the prices of homes going into contract. It can be very telling about demand. The pink line here from, you can see from 22, had sharp down moves in July and again in October 22. This was the market responding to those big jumps in mortgage rates at the time. So when the prices on the new contracts dipped in the second half of 22, that led to year-over-year sales price declines in the first half of 2023. So these contracts are the first indication for those sales that will close right now in March and April. This week's dip could just be a little noise in the data, like I said. But if it proves persistent, that would be a very big signal indeed. We will keep watching the dark red line here. If it dips further, you can be sure that I will highlight it for you. Prices dipped this week, but are still up over 2023. I expect the dark line to turn higher with the season and peak about 3% above the 2022 number, the all-time high in Q2 in a few months. But we're going to keep watching this over the next several weeks, of course, just in case. The median price of all the homes on the market in the US is now $429,000. That's up almost 1% from a week ago and is a couple percent higher than 2023 at this time. This chart is of home prices over time, and the dark red line here is the median price of all the homes on the market across the country at any given moment. The median price of the new listings this week is $410,000. That's a pretty big jump from the week prior. The bright red line here can jump big week to week. It can do that. But you'd expect both lines to be climbing generally for the spring. The dotted lines here help you see how much the market is just slightly above last year at this time. You can also see the all-time high prices for June of 22. Home prices are up over last year. But they are not accelerating particularly quickly. That's the softening I've been talking about. So it'll be interesting to see if we pass that peak from 2 years ago. At Altos, we do not seasonally adjust the numbers. Like, this is the price of all the homes. If you walk into the market today and look around, this is what you can buy. The median price of single-family homes in the U.S. is $429,000 right now. I've shared a few signals for home prices softening, and I use the word softening to be distinct from falling or declining. Home prices are up over last year and do not show any signs of declining in 2024. But in February, of stronger home price appreciation years, we can see these leading indicators pointing up. And at Altos, we track the active housing market, all the asking prices, all the changes in those prices, and so that we can see where sales will happen in the future. Looking at the far right end of the chart here, you can see the data for the most recent weeks. And the steeper those are climbing each week, then the greater the home price appreciation will be for the whole year. And what we can see now is it's not a very steep climb. So you can see an example of the really steep climb 2 years ago at the tail end of the pandemic boom. Buyers were squeezing in before mortgage rates rose, and those buyers were bidding home prices higher each week. That is not happening now. Even last year, the slope of these pricing lines was steeper. So last year ended with 3 to 7% home price increases, depending on which index you use. In February of last year, the data was showing these surprising leading indicators. So at this point last year, they were moving more steeply. And now the data is notably softer. So we'll obviously be the first to point it out if the home price signals turn negative, which they could if mortgage rates jump into the upper 7s or 8% again. Like, that's something to keep a watch out for. It can be really hard to communicate all this with buyers and sellers. There are folks on the sidelines who are waiting for rates to drop so they can swoop in for sudden bargains. They may not realize that how much competition is waiting right along with them. And meanwhile, mortgage rates are actually rising. So if you need to help buyers and sellers see the actual data, you should join us at Altos. Go to altosresearch.com and book a free consult with our team. We will help you know how to talk about the market with your clients and prospects today. There's a link in the description below to join us. Click that and let's get started.